Hi guys, I've always heard people ask me about how is the right way to do this and a right way to do that. After working in the financial industry for about 15 years, I typically have come up with some pretty good answers. I've decided to share those answers with you today. And that is what we'll talk about in this edition of This Business of Life. With all that's happening in the world today with Covid-19, this pandemic has really affected our lives. A lot of businesses have been forced to close, and a lot of persons have lost their jobs. And I'm sure even those that do have their jobs are fearful of the future. This is something that we're going to discuss. A lot of us have made decisions that require us to make monthly payments to institutions. Because we want to honor our obligations, we are fearful of what may happen. In the event that you are in a position where you have lost your job, you are immediately concerned about what you can do to make sure that you are able to live up to your expectations. Tip number one, the first thing you should do if you find yourself in a position that you cannot make your loan payments on a monthly basis is to have that conversation with the financial institution. The earlier you have that conversation, the better it is for you. What institutions don't like is when persons wait until the due amount has been passed due, then they come and try to have that discussion. If you do that, you have already placed yourself in an unfavorable position. First thing I can tell you is to ensure that you have that discussion with the financial institution early. Tip number two, start to revisit that budget that you would have created before. The ideal situation is always to have a budget or to have some idea of what your spending is on a monthly basis. Some of us may write it down, others may have it in our head. This is the time that you must write it down. Look at that budget and start to ask yourself, what are my obligations that I must do and what are the obligations that I would like to do? Those obligations that are your nice to haves will have to go first. So what you will do is look at those items on your budget that you must spend in order to survive. That is really what it is. You're in a position because of COVID-19 mainly where you no longer have an income coming in. What you want to do is to survive until you are able to improve your situation. Tip number three, some of us may have family members that we live with or family members that we are close to. Because of the situation that you are now placed in, it's a very good idea to have a discussion with those persons around you that love you and care for you and explain to them that this situation that is now presented to you will require some assistance from them. If you have a spouse, explain to the spouse that at this time you will become more dependent and require a greater level of support. Explain to the individual that there might be some difficult choices that have to be made during this time. One example is if you and your spouse have a car, that's two cars, maybe a consideration would be to dispose of one of those, especially if each of them carry an additional expense such as insurance, additional gas, and if you have a loan facility attached to one. The next tip that we look at is the possibility of finding a source of income as soon as possible. While the job hunt will start immediately, what you also need to consider is all the other things that you are good at. What hobbies you have that you think you could earn additional income from in the interim. So you have 5 tips. 5 tips of things that you can do because you are now unemployed or you don't have a source of income. We started by giving you the first tip of telling you to have a conversation with your institution. But what are you expecting? To have that conversation with the institution, you need to be prepared for the conversation. Understand that what you are going to do is that you are going to negotiate with this financial institution and you must present yourself with options. So you need to go to that institution prepared with information that can propose a possible solution. The second tip was for you to prepare a budget. This is very important when you go into that conversation with the financial institution. When you sit with that representative, you should be able to present your budget and explain to the representative that this is my financial status. This is my current obligations that I have. And there, you should be able to have a conversation of what can be done to make sure that you have financial sustainability. So you have done well so far. You have one, set that early meeting with the financial institution, and two, you have gone ahead and prepared that budget. Now we are going to go into that discussion and need to understand what are the possibilities. Most times, what the financial institution will propose are restructuring options. Now, typically, a financial institution will offer two possibilities. One is what is called a defer of payment. That's simple. All it means is that you won't pay the loan for a period. Sometimes that period can be 1 month, 2 months, 3 months, but because you're going into a negotiation with the company, you will be able to have that kind of discussion with them and determine what that period will be. Now, when we talk about defer of payments, also called in simple terms payment holidays, what you're basically going to get is an option to not pay the interest or the principal or both. This sometimes is called what is called a moratorium, which is basically giving you a break from the payments that you would normally have to make. This discussion you will have with the bank, and they will determine which of these options they will propose to you. However, you need to go and understand which of these will benefit you both. In other words, if the interest payment on the loan is $20,000 and the total loan is $50,000, and you still, based on your budget, will not be able to afford the $20,000, you need to go into that discussion about restructuring with the intent of getting both the principal and the interest deferred. Refinancing is another option that you may be exposed to. The financial institution may say to you that they can take a debt or a loan that you have and propose another way in which you can pay for it. A simple example is a credit card. If you have a credit card that's $100,000 is owing on it, the institution may say to you, because the credit card has a high interest rate of most likely over 40%, they will take that amount owed on the credit card and transfer it into a loan. An example may be an unsecured loan. In this instance, the interest rate will be significantly lower, somewhere between 16 and 25% based on what market conditions are presenting themselves with. What does this mean? This means that A, you will have a longer period of time to pay the loan. You don't have to find the money at the end of the month, like is the credit card that is due. You may have a period of 5 years, 2 years, 3 years, whichever is better for you. And also, because the payment is extended over a long period of time, it therefore means that you will pay a lower amount on a monthly basis. Refinancing is always another option available to you. So this is another thing that you need to consider when you're going to the financial institution. How can I present a position where I can then refinance my loan or change the way in which I currently pay the loan so that it benefits me and allows me to honor my obligations? So far you have done well. You've prepared your budget, you've set that meeting with the financial institution, you've spoken to your families about what's the possibilities, and you have looked at ways in which you can earn additional income. Awesome. What you must know is that going into the discussion with the financial institution, there are some variables that they will consider. The main thing that they will consider is how you treated the loan. If you have been paying this loan for 2 years and you have been late numerous times, you have missed numerous payments, it all does not speak well for you. Your credit history is a key indicator to see if the financial institution wants to have a favorable discussion with you. This is why earlier I would have mentioned that don't wait until the loan becomes outstanding or overdue before you set that meeting with the financial institution. Because, as old people say, too late shall be your cry. The challenge with that situation is that you would have already waited until your credit history or your payment history has been destroyed to start to have that discussion. No. What you need to ensure is that you have as squeaky clean a record in terms of payment history as possible in order for you to get a favorable response. Typically, institutions will look at two things to determine if they want to have these kind of discussions with you. One is your ability to pay, and two is your willingness to repay. Now, if before you had the current situation, your willingness to pay, as in to pay on time and pay when it's due, has not been positive, then automatically there is doubt in the financial institution's mind. So what we have to encourage is always to manage your debt well. So you have done well. You have managed your debt in the past well. You have done all you need to, and the financial institution has agreed to work out one of the options with you, whether it is refinancing or restructuring or defer of payments. They have presented some option to you that will make your situation better. The job is not done. You must continue to embrace the relationship with your financial institution. Keep in contact with that representative and let them aware in all instances what your circumstances. It may get better or it may get worse. Whichever is the case, you must keep in contact with your financial institution. The worst thing to do, which is what most people do, is avoid them. They try to call you, you don't answer. They send you emails, you don't answer. That is a display of your unwillingness to work with the financial institution. And as I said previously, this raises a red flag for you. It will not affect only your current position, but your future state as well, because you won't be in this position forever. And when you do come out of this situation that you are in, your behavior of unwillingness to pay will affect you going forward. So embrace the relationship, have the conversation with the individual, take those calls and state what your position is. And most of all, and probably the most important part, is do what you agreed to do. If you agreed to make a payment of this amount each month, don't shortchange the payment. Don't pay it late. Don't do some things that will cause the financial institution to have doubt in what you agreed on. That will not work for you in the long run. This is this business of life. Don't forget, like and subscribe as we have more exciting videos for you in the future. Have a good one.